In this video, we're doing a complete walkthrough of a trading strategy that combines Bollinger Bands and the RSI. But before we jump in, really quick and important thought. Everything here is just for learning. And it's always got to remember that how a chart looked in the past is never a promise of what's gonna do next. Cool? Okay, so let's dive in and build our trading idea right on TradingView. The foundation of this approach is gonna be Bollinger Bands. To get them on your chart, just go to the indicators at the top of the TradingView and just type in Bollinger Bands. Click on it when it pops up and boom, they're on your chart. Now common question is, what markets can you look at with this? I've personally explored the idea on different things like forex, crypto and stocks. And for time frame, I found this particular setup interesting to look at on the smaller charts like 1 minute or 5 minute and even the 1 hour and 4 hour charts. So what are these bands anyway? The easiest way to think about them is like a channel that shows you how stretched the price is. You've got that line in the middle, which is basically an average price, and then two outer bands. When these price hits those outer bands, it can sometimes suggest that things are getting either overextended one way or the other. It's a simple way to visualize the market's volatility. But here's the thing, we're not going to use the standard settings today. We're going to tweak them for this specific approach. So go ahead and open up the settings for the bands. Then under the inputs tab, we're going to make two little changes. First, change the length to 55. We'll leave the other stuff the same. But the main adjustment is changing the standard deviation from 2 down to 1. This just gives us a tighter look at the price action for what we're trying to do. Okay, let's look at this Bitcoin chart as an example. So, see how the price candles are kinda suffering along the top of that upper band? For me, when I see that, I suggest the market might be in an uptrend. So in my mind, I start thinking about potential buy-side opportunities. But I'm not just jumping in. The idea is to wait for the price to pull back to that middle line. That's an area I found interesting for potential entry. The same logic works in reverse. Check this out. The price is now riding below the lower Bollinger Band. This might suggest a downtrend, which gives me thinking about potential sell-side setups. And again, it's all about being patient. I'd wait to see if the price pulls back up toward that middle line before even considering potential entry. But wait a second, just using one indicator can sometimes give you a foggy picture or a signal that goes against the bigger trend. We want to avoid that, right? So this is where I like to bring in another indicator, just to get a second opinion. The one we're gonna add is totally free on TradingView, and it's called the RSI Histogram. Just go back up to the indicator, search for RSI Histogram, click it, and it'll show up below your chart. This tool can help confirm the momentum that Bollinger Bands might be showing us. So, the RSI histogram is just a different way to look at the classic RSI. It shows the momentum in bar form, which I find really easy to read. Instead of line from 0 to 100, it uses positive and negative bars to give you a quick visual on market momentum. To get it working for this approach, we need to adjust the settings. So, open up the settings for the RSI histogram and the inputs tab. Let's change the RSI length to 14. Then change the moving average length to 100. Using a longer moving average here helps me get a sense of the broader market picture. And here's the important part. Make sure you check the box for color bars. This is what makes it so easy to read. Now, you'll see green bars and red bars. Generally, green bars suggest bullish momentum and red bars suggest bearish momentum. Alright, so we've got our indicators set up and tweaked. Now let's walk through the process, how to put this all together to spot the potential setup. When I'm looking for a potential buy, here's what I'm looking for. First, I want to see what looks like an uptrend. On the chart, that means the price candles are consistently staying above the upper Bollinger Band. That tells me buyers seem to be in control. Next, after the push-up, I'm patient. I wait to see if the price candles pull back down to the middle Bollinger Band. I want to see a touch or get really close to that line. That's more interesting area for potential entry than chasing the price at the top. Then after that pullback, I'm watching for what looks like a bullish breakout. This is where the price pushes back up and break above the upper Bollinger Band again. It suggests that upward momentum might be returning. And for confirmation, I glance down at the RSI histogram. For me even to consider it, those histogram bars have to be green. If they're red, I'm hands off. That tells me the underlying momentum might not be strong enough. Now risk management is obviously super important. There's no single right way to do that, but one common approach is to place a stop loss a bit below the mid Bollinger Band or maybe even below the lower band. Another spot some traders use is just below the most recent swing low. It's all about finding what fits your own comfort level with risk. As for potential profit target, a common framework is called 2R target. That just means you're looking for a potential profit that's twice as big as your potential risk. So if your stop loss represents a risk of say 10 points, you might look for a potential gain of 20 points. Now for a sell setup, it's pretty much the mirror image of the buy. First, I'm looking for what appears to be clear downtrend, with price candles hanging out below the lower Bollinger Band. Then I'm patient and wait to see the price pull back up to that middle line. Next, I'm watching for a bearish breakout where the price breaks back down below the lower Bollinger Band again, suggesting the downward move is continuing. And for confirmation, I'm looking for the RSI histogram to be red. If it's green, I just wait because the momentum doesn't align. For managing risk on sell, a common idea is to place the stop loss above the midline, above the upper band, or above the recent swing high. Again, it's about what you're comfortable with, and for the take profit, that 2R framework is common approach here too.